Good morning, and welcome everyone to the Trading Success Blueprint, the Beginners Online Trading webinar. My name is Danny, and I will give you the webinar today. Before we will begin, as always, I would like us to go through a quick sound check to make sure that the sound is in a proper level and that the screen here is visible for everyone properly. So feel free to use the question section to make sure to comment me that the sound is okay on your end and that you can see the screen. Thank you, Stephen. Very good. Thank you, Nora. Excellent, excellent. So to begin with, let's go through the structure of the webinar. We will understand what happens in every part, and then we can carry on with ease. The first part will be more of an introduction to the company, what services we have in this facility, which is called, by the way, the Web Trader. Okay, this may be the desktop version, but we also have it in the app that's called AvaGo. We'll have a bit more comprehensive explanation about it as we start moving. The second part will be, well, the majority of the webinar will happen on the second part. Will be very practical. We'll go through certain logic behind what is sell, what is buy, how to do certain things. Perhaps we'll even have on a nutshell about analysis. Okay, but that could be some kind of a bonus if we'll cover everything that we need to go through first. Okay, and it's important to know that any capital markets and trading information disclosed in this webinar is provided for informative purposes only and should not be constructed or applied as an investment advice, recommendation, or a suggestion. Furthermore, a very frequent question that we get is if there is a possibility to get the recording of the webinar, which unfortunately I don't have a way to ensure sending the recordings, but I can tell you that you can find all the recordings, including this webinar and others, on our channel on YouTube. Okay, and then you can, for your convenience, just re-watch it in your own pace. Watch it with a subtitle. Really, on YouTube, everything is very easy today. Yeah, apart from that, it's not immediately, by the way. The recording could take maybe later on today or tomorrow, but eventually it will be uploaded, and so the rest of our webinars. Okay, so in this case, I would like to make sure that everything is recorded, as I mentioned just a minute ago, and then I'll be back and we will begin. So just a few moments. Thank you very much. All right, so welcome back. Like I said, this is the Trading Success Blueprint, the Beginners Online Trading webinar. My name is Danny, and we can finally hit the road. We are going to begin with a light introduction to the company. As many of you know, we exist since 2006. We have 9 licenses worldwide. In case you got a query or a question, you can easily address the customer service here at the bottom left through either the chat or the WhatsApp function. Let's first start get ourselves some place to write down our notes. Just a second. Should be a notepad hiding here somewhere. Just a second, guys. I apologize, guys. My system seems like she needs a moment. So let me just quickly here find the notepad. Okay, and that should be fine. Great. All right, so like I said, this is the Web Trader. Okay, you can find the customer service at the bottom left right here at with this button or through the WhatsApp function. If you have a query regarding trading, you have an account manager. Let me just put here an email for customer service as well. Okay, so obviously customer service is going to help you with customer service, but what if you have a question or a query regarding your trading, regarding your account, or something like that? So you can have a senior account manager assigned on your file, which can provide you the assistance exactly with that. Okay, trading kind of questions. It could be anything under the umbrella of trading, starting from calculations to analysis to risk money management to a trading plan. A senior account manager is basically here to provide you with all the necessary things related to trading, and customer service is here to give you the assistance related to customer service. Now, to contact the customer service, you can easily contact, like I said, through the chat, the WhatsApp, or the email. And your senior account manager should contact you automatically depending on your eligibility. And if you don't have a senior account manager, you can ask the customer service to ask somebody to be assigned. Now, as I said before, this is the WebTrader on its desktop version, okay? But we also have it in the app, and that's called AvaGo, okay? It doesn't look exactly the same from the nature of being a desktop version to being an app, but the features are very similar, and some things that I'm going to show you today, you can also enjoy on AvaGo as well. Let me also mention the other platforms just so we will have them. We are not going to explain into depths, but I want you guys to know that we have them as well. So the WebTrader and the AvaGo are obviously a self-designed platform that we have, and it's embedded in the website. You don't need to download, you don't need to install. It's right here, and you can use it at any given time. MT4 and MT5 are, well, self-explanatory. Like I said, there is no need to talk too much about them. We also have the Ava Social and the Ava Options. Ava Options is also something that I wouldn't like to delay on. Okay, Ava Options. But Ava Social is something worth mentioning, and the reason is, just a second. Social, and the reason is that this is a webinar for beginners, and Ava Social has a major contribution for beginners from a simple reason. It can give you two functions that can assist you along your journey. One is follow and the other one is copy. How does that work exactly? Let's suppose that I've downloaded the app Ava Social, so I have access to lists of traders which I can follow or copy. If I'm copying someone, that means that I'm practically linking my account to his account, and then it will execute the positions automatically without me doing a single thing. Later on, I can go to my MT4 or MT5 and quickly review what my trader did, basically what I did, because as I said, everything happens automatically. Then I can review and I can adjust the difference between me and the trader. Therefore, if I'm following someone that has 500,000 in his account, I'm with 10,000, it's probable that he will take a position that I can't even open, right? Therefore, I can adjust the difference and make it to make sense. I can change the lot size and so on. That's copy. Again, it's automated trading. When my account is linked, I don't have to do anything. Follow, it works the same way, just without launching the position. So I'm still going to get the record of what the trader I'm following is doing, but nothing will happen automatically, and I can just use it to keep it in my sheets. I can use it to improve my strategy, and I can use those notes as I want, as a very informative strategy that I didn't need to do anything to enjoy. Okay, so I can follow someone to get the information, I can copy someone to get the information and launch the position automatically. It's up to me to choose. All right, now that's regarding Ava Social. We did go through the platforms that we need, and we are going to carry on with the WebTrader and the AvaGo. Just a second. Okay, so I've moved it down the line so we would know it's separated, and the features that I'm going to show you now are on AvaGo and the WebTrader, and you can find them on those platforms. Okay, it's important to know what I'm going to show you now are features that only in our facility. Okay. All right, so to begin with, let's quickly review. There are a couple of things, but I'm thinking what's the most useful thing to let's go through Ava Protect. Okay, so Ava Protect is, let's quickly let me quickly open Gold here. Okay, so what Ava Protect does, let me put it right here. Ava Protect, what it does. So Ava Protect, it allows you to protect your positions for a certain time frame, and whatever you lost during that coverage, you will get back. Okay, there is a fee when using the service. Okay, now what does that mean exactly? Just hold on, Danny. To protect what do we need protection from, right? It's a very good question, because we're all under the impression that we are here to make profits. So why would I need to protect my position? Anybody has any idea? What does that mean to protect the position? And if I lost, anybody has any idea what do I need protection from? Your losses. Thank you, Jimmy. Very nice. So Jimmy, you're absolutely right. I can protect myself from the losses. But this feature is not going to prevent me from losing. Okay, it's not what it does. What it does is it lets me lose and it re-embrace the losses during the coverage. Okay, let me draw down here a scenario just to show you. Okay, so when I'm clicking on the product, just look how easy that is. Clicking on the product, okay, it lets me choose the time that I would like to cover, beginning from 1 hour, that's worth $45. Let me just quickly bring it down to the minimum. Okay, now if I begin with 1 hour, that means that in an hour it's no longer covered, this position, and I'm paying a fee of $5.74 to protect this position for 1 hour. Okay. If I click here on the plus, I can extend. You see what happens here? I can extend the length of my coverage, which increases the fee accordingly. And if I increase the lot size as well, so watch what happens if I take it from 0.01 to 1. Let's say we are going to just increase it by 10, and it increases accordingly, right? If I make it one lot, it becomes from 86, 860, right? Regardless that I can take this position, but we understand the fee here changes through two factors. The length of the coverage, 1 hour is 574. If I increase it to the max, it costs $1,800. Okay, and if I would have it this way, 0.01, it's reducing it considerably. Okay, as I've showed, so either the time or the lot size, they both have an impact on the fee. Okay, and it's important to understand that the fee will be paid regardless. Okay, if I'm using the product, I'm paying the fee. If I'm using the product, I'm paying the fee. Now, why am I saying that? Because even if I make take profit or stop loss, I'm using a take profit and stop loss to simulate how much I can gain or lose, right? So hypothetically, let's say we are going to increase that by 10, maybe even 20. Okay, let's suppose that we are going to increase that by 20 as well. Okay, and now, sorry. And now we're looking at potentially making $22, potentially losing $22, and our fee is $18. $18. Now, in this situation, I have to say, first of all, I want to see if you guys understood what I've explained. Okay, considering this scenario here with fee of 1831, and we have take profit. Don't worry, guys, I'm explaining in a minute what it does. 24.43, which can lead to $22 profit, and we have 2,400, well, 23.99, okay, which is $22 loss. Okay, now regardless if I have made profit or I had a loss, okay, I'm still gonna pay the fee. This is why, to my personal opinion, this comparison that I'm doing now is quite advisable, because I would want to know if the position is destined to make profit that will be higher than the fee, or I end up paying a fee that is almost as much as my profit. Or even, let me show you a horrible example how to use the product, just to make it a bit clear. What do you think about that scenario, guys? Is this scenario okay? Let me also bring that back, just to show you, this is a horrible example how to use it. Okay, why is this so bad? Because I'm actually paying a fee of almost 20 quid to make 10 or to lose 10. So what's the point using the product? Okay, now if it would have been like this, okay, and I would go with, let's suppose, a little bigger position this way, let's say, and in here it could have been this way, then it's a whole different story. Why? Because I'm paying 183 to make potentially 500 or potentially lose 722. Okay, and then this comparison makes more sense because I'm using the product much more efficiently. Okay, we're not going to carry on with the example because I guess you guys understood what I'm explaining. Okay, let me quickly go through the take profit and the stop loss. So for people who don't know, take profit, what it does is it marks a price on the platform that when the platform gets to that price, it closes the position automatically with the profit. Stop loss, what it does is it mark a price on the platform that when it's getting to that price, it's closing it with a loss. Okay, this one closes the position automatically with a profit. This one closes the position automatically with a loss. Okay, is that understood? Very, very nice. Okay, let's carry on with ease. We went through AVA Protect. Oh, the one thing I wanted to mention is that AVA Protect is only for Forex, gold, and silver. Okay. And that's very, very nice. Do we have any questions about that bit, guys? Question from Arnold. How many times can I? There is no limit, Arnold, to the amount of times you can use this product. You can use this product endlessly. Okay, but the one thing that you cannot do is you cannot extend the position when it's over on a particular position. So for instance, if I have, let's suppose I cover it for 2 days, yeah, and it shows me here I'm covered for 2 days. And let's suppose that at the end of the 2 days, I would like to extend it by another 2 days. Okay, this is something that I will not be able to do. Okay, we don't have a limit to how many times you're going to use the product. You can use it as many times as you want, but you may not extend the length of your coverage. Okay, if it's 1 day, it stays 1 day. You cannot make it 1 day and then another day. You cannot make 3 hours, 6 hours, only if you do it in the beginning. Okay, I hope it makes sense. Excellent. So this is regarding AVA Protect. On the left-hand side, there are many useful things here that can lead you to very useful content. One of the things here is the signal section. If I click on it, it takes me to a very nice place where I can review lists of signals. And just by clicking on the signal, it already dropped down the analysis. It's showing me support and resistance. Very nice. Okay, I can choose a buy or a sell. Let's go with the buy. And based on those numbers that we just saw that was written down, it's placing automatically take profit and stop loss. We've already learned what they do, right? Stops the position automatically with the profit, stops the position automatically with a loss, and I have them automatically already embedded in the signal. All I have to do is just to click here, buy. Okay, now it's important to know that the signals are provided from the Trading Central and not provided by AvaTrade. And of course, I'm not going to tell you how good these signals are. You must test it by yourself. And I would highly, highly recommend you to also do analysis and not to rely purely and permanently on the signals. Okay, let's carry on with ease. So this is technical analysis, of course. If I carry on in here, we see the new section. Let's give it a go. Okay, and the beauty about that section is that if I'll go down, okay, let's suppose I go through that, I read everything in here, and I want to know, even you know what, before I open the article, sorry, before I read the article, I want to know what this is relevant to, right? So of course, if I'm reading something specific, I go to, let's say, stay with commodities. Okay, so let's suppose I'm reading on I'm reading an article about gold. Obviously, it's related to gold. But if let's look at oil. Okay, so oil, it will be oil. But if I look at the pre-Asia market, we're still on commodities. If I look at some of the articles here, oh, there we go. You see, pre-Asia market brief, the S&P, Nasdaq, and the rest of the things written here down doesn't have an impact only on one asset, right? I can enjoy variety of assets just by going through that. Okay, and it's also showing me here the potential asset to volatile according to the news that we have here. Okay, crude oil, gold, Bitcoin, Aussie versus dollar. Okay, so it's very, very useful, very straightforward. I can go through articles and then I go and analyze. It's just amazing. In here in Discovery, if I click on Discovery, it doesn't do anything. I have to pick from the list here. To begin with, let's go with Market Buzz. Okay, Market Buzz is also a great, great way to find which assets are more volatile and stock active, and I can have a better idea what to analyze. So let's go with Microsoft. It's right here in the middle with the biggest bubble we have here. And it's also going to show me the revenue. It's going to show me the earning announcements, all kind of news section here. That's, again, just amazing. It's so accessible. I don't have to go too far. Yeah, kind of self-explanatory, right? You pick whatever you want. Okay, let's suppose we're going to go with Tesla this time, not Apple. Okay, yeah, again, it's showing all kind of information here. It's the trending topic. Okay, all right. If I carry on down the list, we have here Forex features ideas. It's also good to have as an additional layer of analysis. Okay, I can also play with the indicator here. I just don't want to delay on that now. Economic calendar also. So the economic calendar, to my personal opinion, is maybe the strongest tools in the world to enhance your fundamental analysis. The reason is, what exactly is fundamental analysis? Let's speak about it for a moment, okay? because this is a question that rises. What should I focus on? Technical analysis, right? Some people are more technical analysis, and fundamental analysis. Right? Who is more fundamental here and who is more technical here? You can use the question section, guys. It's not there is no better if you're technical or fundamental. It's just for my personal curiosity. Who is more technical here and who is more fundamental here in terms of analysis? Okay, lean, fundamental. Joe, okay, more of a technical guys. Okay, so we have one fundamental, one technical. Who else is technical? Who else is fundamental? And who is both? Who does both? Both technical and fundamental analysis. Emmanuel, okay, so Emmanuel, you're doing both. Oh, okay, Lynn, you also do both, but mostly fundamental. Okay, that's fine. Okay, Sean, I'm doing both. Okay, very nice. Okay, great. So technical analysis on its basics, of course, it's things that we can find on the chart. Okay, I'll explain more into depths while we get to the charts, but now we're with the economic calendar, so I'd rather focus on fundamental analysis. But basically, technical analysis is things that we can find in the charts, averages, statistics, support and resistance. We're going to mention that as well. Indicators. Technical analysis is a very wide umbrella, but the majority of the things is, like I said, of course, it can be sprouted to many categories, but technical analysis by itself is things that we can find in the chart. Fundamental analysis is what we don't have in the charts. In other words, that can be news, that can be articles, that can be certain occurrences, that can be things that has worldwide impact, like, God forbid, a pandemic, or maybe something even worse than that, if there is anything like that. Okay, maybe certain conflicts. Okay, so we have technical analysis, we have fundamental analysis, and the easiest thing to do, like I said, is to use the economic calendar. And the reason is that in here I can basically filter right away all the important things. I'm going to show it to you right now. So right now it's presenting everything, right? It's presenting all the countries. Just a second, let me reset everything. It's presenting all the countries. It's presenting the all high impact, low impact, medium impact. It's presenting basically everything. Okay, now if I would like to specify on a specific currency, let's suppose I'm only following the dollar. Okay, so what I'm going to do is click here on the arrow, then I'm going to click on all countries, and then I'm going to specifically click on the dollar, on the US, United States. And then I can either pick here from the list, or I can minimize this to something that I'm more interested in. So if I'm going to go in here and click on the 31st, and then I'm going to move forward to August, and I can mark it to see, let's go a whole month, right? Even though there's really no point doing that, but just to show you. Now it's going to go all the way down. If I load more, it's going to go a whole month forward, okay? And I can find all kind of things here. For instance, let's go non-farming payroll. Okay, you see that this is next Friday, right? Sorry, this is this Friday, right? The second, yeah, it's in 3 days, 2 days, sorry. Well, including today. So I can find all kind of things like that manually from the list, or I can search it in here for the Maglify. Okay, and if I don't want to go and search for a particular event, but I want to be aware of the important events that we have, I can go and filter it by either low, medium, or high. If I'm going to go with a high impact, that's going to present me only events that we anticipate that will make the market fluctuate aggressively. This would obviously be a normal event, and this is a low. Oh, I can filter both. Okay, so this is something we added recently. Now we can have more than just one level. There is a question here. Help me understand the risk to reward ratio that I see on Ava app. Okay, no problem. We'll get to that. Actually, I think we're ready to begin the second segment. We went through a lot of things here, and we really shouldn't delay too much because I do want to teach you practical things. Okay, so this was the economic calendar, and the introduction part is can be concluded. Let's click in here. And let's find ourselves a nice asset to analyze, perhaps one of the indices. Okay, let's go down. Dow Jones looks nice, NASDAQ looks nice. Let's go with NASDAQ. Okay, so US understroke Tech 100 is NASDAQ. And even if I'll write down here NASDAQ, it's going to show me US understroke Tech 100. Okay, NASDAQ is currently standing at 19,213. And let's just begin. But I would like to clear our slate and to put down the name of our asset, NASDAQ, also known as US Tech 100. Okay. Now, how do we even... Okay, so let's suppose I'm a beginner. I have absolutely no idea. Sorry, just a minute, guys. All right, sorry about that. Okay, so let's suppose I have absolutely no idea what I'm doing, how I'm doing. I have no certain agenda. Okay, I randomly let's add another layer. I randomly picked NASDAQ from the list. I don't even know what that is. Okay, even though it's the most, I think, one of the most famous indices, including blue chips company that exists. But yeah, let's suppose I'm now facing NASDAQ. I'm looking here on a very rough analysis. This seems like a maybe uptrend direction. Okay, let's see how it goes. So by the nature of the idea, if I'm buying something and it goes higher, I make profits. If I buy one share of one index, perhaps. Okay, buy 1 unit of NASDAQ at 1916 and it goes higher. Will I make profits? Guys, this is the simplest question. Okay, if I buy now, click here, buy, and it goes higher, will I make profits? Will I make profits or not? If I buy now and it goes higher, will I make profits? That's correct. Very nice. Okay, so how much do I need to go to make a lot of profits? Do I have any idea how far it can go? Okay, before we carry on with that, and we can definitely carry on with that, let's have a better idea how this toolbar can be used to assist us with marking some things here on the chart. Okay, so this is the search field. There is no wait, there is a question here. Your platform shirt is eligible to read. I'm not sure. Oh, I don't know how to customize the screen. Unfortunately, I don't have a specific way to increase the font here or the numbers or the characters. Mr. Tamitope. Unfortunately. Okay, that's how things are. But you should know that if you're using a computer, it's much bigger than the phone. So I think this is pretty much as big as it can get. Okay, so if I go from here to the right, here we have the search field, here we have the time frames. Okay, we can change it from clicking on it, then scroll down. We have minutes, hours, days, weeks, and months. If I go to the right, we have here candles, bars, line, okay. If I keep going to the right, we have here no crosshair or crosshair. It's important to understand that without the crosshair, I'm not going to be able to have any data from the candles, okay? So if I change to the crosshair, every candle shows me the numbers. If I change back to the no crosshair, nothing comes up, right? Okay, if I keep going to the right, I can split it to two charts. So we have Nasdaq here and here, another Nasdaq. Let's make it gold. Okay, and then if I pick it from the list, it becomes gold. Then I can have two assets simultaneously. Let's switch back. Okay, here I have indicators, and that's very, very nice. Now, as I said before, if I buy something and it goes higher, I make profits. That's wonderful. What happens if I buy something and it turns around? Who knows? What happens if I buy something and it turns around? What if I buy something and it turns around? Who knows? You obviously make, thank you, Charlie. You obviously make losses. I don't make losses, but I have losses. So you're right, Charlie. Thank you. If I buy something and it turns around, that means if it goes against me, I bought something, but it went with a lower value. That means that I'm gonna lose. Okay. If I buy and it goes higher, I make profits. If I buy and it goes lower, I have a loss. Okay. It works other way. It works the other way around. If I sell something, I want the value to decrease. Okay, let's make it if buy equals, we want the value to increase. If sell equals, we want the value decrease. Okay, that's the basic. Now, how does that work exactly? When I'm buying something and it gets higher, I make profits. If I buy something and it goes against me, I have losses. Okay, but how can I know how far away it will go before it turns around? It's obvious that nothing stays forever, and as you can see, if I'm showing you month here, there is not one particular moment when Nasdaq went only up without turning around. In fact, let me show you the minutes just to understand how frequently Nasdaq is turning around. Okay, look how many times red became green and green became red, right? Red, green, red, green, red, green. Okay, that happens a lot. So only the direction up or down doesn't give me anything. I need to grasp, okay, if it goes up or down, I need a certain length that through that length, I can claim my profits. Okay, it's important to understand if I bought something and it went up, I made profits. If it turned around and I didn't close the position, I'm not going to take the profits. I'm going to have losses. okay? And then I can either wait until it will turn around, then break even or make profits. There may be million scenarios afterwards, but the basics here is if I bought something, I need to claim the profits at the moment that it was higher. Okay, as simple as it gets. In other words, if I'm just giving you guys the direction and telling you Nasdaq is going up, actually didn't give you anything, because the upward can be just like that. Could be 1 hour, just a few dollars, and then it turns around. And if you weren't quick enough, you didn't make any profits. Okay, that's one way to do that. Now, the other way to do that is to somehow measure how far it can possibly go. Now, we have certain levels that can help us adjust these things. Support and resistance. We also have indicators that we can apply, which are certain levels that helps us indicate how far it can possibly go. Okay, even though sometimes we have all-time high and it, never mind. So we can also apply Fibonacci. Okay, we don't have time for that now. But the idea here is to just buy or just sell without specific price to aim for or support and resistance to rely on. I'm basically blind. Okay, I don't know what to expect. Now, a very nice way to simulate how much I need for Nasdaq to move is using the take profit and the stop loss. But the problem is that even if I'll choose, let's suppose I want to make $1,000. Okay, let's go. Let's set a goal. We're going to write down a few things here that will help us construct the position a bit more properly. So we have target, time, units, and movements, units. Okay, the target, let's suppose that it's $1,000. Time length. To make $1,000, I'd be happy making it in, let's say, 1 week. Okay, $1,000 a week, $4,000 a month, not bad at all. And now the movements. Okay, also known as price difference. Price difference. Now, what is the price difference that we're looking at in here? So if I would want to go for 1 unit over $1,000, I can just place here, let's say $1,000. Let's see, 2222, and then I can make 1,000. Now, 222 is right here. Okay. Now, how can I know if it's going to get there or not? What I can do is one of two things. A, I can analyze the previous weeks. Let's quickly switch to weeks. And I can see how frequent Nasdaq has been there. How long ago? So we have 1 week ago. Okay, it's been there 2 weeks ago. Not bad, not bad. The other thing that I can do is I can subtract the open from the close or the high from the lows, and then to measure the length of our candle. So basically I can go like this, go 22nd, which is last week. We have open, close, high and lows. In this case, we're just gonna put it this way. Okay, the open here is 19,861, close is 19,240. I'm getting it from here, right? The data. And then we have the high, which is 20,084, and then we have the low 18,883. Okay, and then I can just quickly subtract it. Let me get a calculator here. Okay, and then I can quickly go 19,816 minus 9. But the problem with this method, not only that it's extremely time consuming and to do all of that, this is not enough. It's not enough to measure an average. This is just enough to know what happened a week ago. And the problem is that if I'm going to rely only on one candle, it might not be as accurate. Because as you can see, each candle here is different from the other one. Therefore, I need to start writing down for, what did I do? I need to start writing down the numbers for all the candles that I want to analyze. And that's crazy. So what we're going to do instead of it is we are going to apply an indicator. We're going to click here, and then we're going to write down AVE, and then we're going to click and put it to the right. That's called average true range. Average true range is one of the accelerators, and what it does is it does exactly what we did now. And there's grasps. You see where it says here length. It grasps the length that we are going to choose, and it's going to give us an average range instead of us putting the numbers down this way. Okay, there are types here: exponential, Wheeler's, weight, and simple. It's not relevant at the moment. I can just tell you that Wheeler's is my favorite because it includes the difference of the prior candles with the difference of what we have today. So it's just a little more accurate number. Instead of 14, we can make it, since we're looking at weeks and 14 weeks, let's do the math here quickly. It's a little more than 3 months, right? In 3 months, we have 12. We have 12, so let's make it 7. So that's also almost going to be 2 months. I think it's around here, and that's not bad. It's the previous segment. Let's make it mustard maybe. And then we see that the average movement is 767. So if I'm expecting it to move 1,000, right? Let's put it down. Now price equals 19 to 13. Gold price is 22 to 2, which is 500 more than the ATR. Okay, we understand why, right? This is 1,000 more than the now price, and this is the average. So ATR equals 767. Okay, no problem. And I'm thinking if it can move 767, instead of planning it to move 1,000, which is obviously not an average movement, not a typical movement, maybe I should aim for less and then increase my lot size. Okay, so let's, instead of taking 767, which is the flat ATR, let's try and compare it with 500 as PAM, potential average movement, okay? Which is my personal opinion about how the ATR can be adjusted. So instead of expecting 767 per unit, I'm expecting only 500. And now we're gonna take the 1,000, okay? We're gonna give you a quick equation here, which is going to be target divided by movements, which is 1,000 divided by target divided by movements equals units. So 1,000 divided by 500 equals 2, right? Do we need a calculator for that? Not really. I guess you guys understand what I'm doing. Okay. And then if I put here 2 and I change the difference from 1,000 to, let's do it with a calculator. Okay, so the now price is 19,200 plus 500. Very, very nice. Excellent. Let's be precise with the difference. Oh, 1,000. Yeah, it seems like it's moving and it's messing around with us, but I guess you guys understand the point of what I'm doing, right? Let's try and get a little more precise. Okay, very nice, very nice. So in this case, I have a position that is, well, at least till this point, it's well composed. I know what I'm expecting for. Let's also measure the 500 the other way around, right? So let's look at, if this is a buy, my take profit should have been higher, because when I'm buying, we said we want the value to increase, right? Buying, we want the value to increase. Selling, we want the asset to decrease. Okay. That means that to choose the stop loss, so the gold price is no longer that. Profit target price equals 723, sorry. And then we have stop loss, target, right? That doesn't look right. Let's do now price. Sorry, let's do now price minus 500, which is that. Okay, and this way I can. Does it work? Okay. Okay then. I think that my sound has disappeared. Well, I hope that it's good now. Anyway, if I compare the same length that I took for the buy to the stop loss, we can make 1,000, we can lose 1,000, as this is the same difference from the gold price. That's just 500 higher, but this is 500 lower. So obviously the number here should almost be the same. And yeah, now I can take care of my ratio. So how exactly does that work, the ratio? We get this a lot, right? Ratio, R&R, risk reward, right? R&R, risk, reward, ratio. What does that mean exactly? That means that my ratio now is 1:1, okay? And what does that mean? That means that I'm expecting to make 1,000 and I'm expecting to lose 1,000. I can tell you right away that there are traders that doesn't like this ratio at all, and there are traders that are doing miraculous things with this ratio. I'm not a big fan of adjusting the ratio to extreme, but you can definitely do that. And I'm going to show you now a way to compare your ratio from 1:1 to 1:2, or maybe 1 to 0.5, right? So how exactly are we going to do that? Okay, I'm just going to say this as a common thing and not as a formula. I personally like when my profit ratio is considerably bigger than my stop loss ratio. Again, it's absolutely not mandatory, and you can do it the other way around or whatever, however you want. So how do I maintain the profit the same but still decrease my stop loss? How do I do that? Well, the obvious thing to do is just to get the stop loss a little closer. So if I slice it by half, and instead of expecting 500, I'm expecting only 250, it means that my potential loss will go down by half. Let me just show you that quickly. Let's take that, 18,963. So we have 18,963, 500. Excellento. Very, very nice. So we have expected profit of 1,000, just like we wanted. We have expected loss, which is 500, ratio of 1:5, which is excellent. Very, very nice. Now, this position is it's getting close to be well composed. Okay, what are we missing here? is to be able to know if we can launch this position, if we have enough margin to launch this position. Okay, so for that, we're going to write down a couple of things. Don't worry, guys, we are nearly done. Now, let's write down price per unit, which is, we already know that, right? 223. Well, that's the sell, but with a buy, 225. Okay, and we have number of units equals 2. And we have a leverage 1 to 20, not bad. Okay, not bad at all. And now we have margin impact. So a quick summary to save you a lot of trouble is to go price per unit times number of units equals value. And we go value divided by leverage equals margin impact. In other words, 19,225 times 2, it's our value, right? It's written right here. I don't even need to do that. The leverage is 1 to 20. Therefore, if I will divide my value, if I will divide my value by 20, what will that be? Let's try, let's see. Divided by 20, okay. And that's already here as well, right? It's already here. So the biggest advantage, guys, to use this platform over MT4 and MT5 is that the calculations are done automatically, and you don't have to think too much because it's already here. Now, so we have the margin impact, but what exactly is the margin impact, Danny, and how is that related to be able or not being able to take the position? Well, the margin impact, also known as the margin requirement, is the necessary amount to open the position. Okay, and that's the amount of money you need available. That's the amount of margin you need available. And that's how you can know if you have enough capital to open a position or not. Okay, guys, we have a minute before we say goodbye. I hope that everybody feels okay with everything that we've learned. Do we have any questions? Do we have anything that wasn't fully understood? Anybody that would like to share with me anything? Anything at all? Excellent, excellent. That's very good. So I would like to thank everybody for coming here today and joining us today. It's been a pleasure giving you the webinar. You are welcome to join us to tomorrow live Q&A. Other than that, best of luck with trading and have a good day.